Hi everybody, and welcome to this new webinar from Unconventional Forex Trading. Today we're going to talk about support and resistance levels in retail Forex day trading, so apply it to our trading and trying to understand this topic by applying the knowledge that I have quite enough explained in my previous videos, and of course that I invite you always to give a look back in case certain things at this point are not quite clear, that you can always do the math with what I've said in my previous webinars. I'm gonna start from the trade that I activated this morning around 9 o'clock, something like that. Let's just identify a bit correctly the thing. So this morning around between 8:40, 8:50, 8:54 I performed this trade. Now it's 10 hours after, and this is the actual profit. You can see here the pips that I have made by hedging my positions after analyzing that. Now we are having here a 5-minute chart. Let me just put it on a daily chart. In this case, after some analysis with other currencies, I got that GBP Australian dollar was the strongest of all the currencies, and I traded it with euro dollar. And now I'm observing it because it could be that it's time to close the trade, or let's see the development, but with other instruments. Therefore, support and resistance. Let's say that when we normally think about support and resistance, okay, this is the trades that I am actually having on Euro, Australian dollar, GBP, US dollar in buy, and Australian dollar, US dollar. This is the trade that now is retracing a bit, and it's the less powerful at the moment. And then Euro, GBP, of course, here we have a sell, so I'm in positive in all of them. Normally we think about support and resistance, by having, let's say, an hourly time frame, by having this classical and tracing this classical lines that then we can associate with. But there are a lot of levels of support and resistance in this case, as you can see, and they are somehow not very clear, or let's say, which one of them shall we have to choose then, because see, we can also of course work in terms of trend lines and determine some kind of hypothetical, which is not only hypothetical, but it's due to math and to the functions that the price level and price action express. So it could be that we can work with tons of lines, and what we are doing, we are just applying some subjective and non-objective interpretation to the charts, thinking, yeah, of course, now we can trace this chart because we have them. We have these values of high, low, open, close, but we cannot predict what, because of these levels, we cannot predict what the currency will do, what the currency pair will do, and also we have to apply this on each and every chart for each and every currency pair. The majors, of course, that move liquidity in the markets. So by the time that we arrive to the last chart, maybe scenario has changed, or there are new considerations that we must have. So instead of having 4 charts that now I've just opened for your understanding of my positions buy at this point, some of them they are at a good point, other they are not at the buy low or sell high, but because they have been injected in the same time, in the same moment, and because of this, yeah, you have got some minutes of delay, but not that much anyway, but they have been injected at the same exactly time, so they worked together, created that synthetic instrument, which is the sum of the more pairs that you're trading in a hedging style. From my perspective, I sometimes trace and define levels of support and resistance. But I know that this way I will always be influenced by something that I see, or what the markets want to tell me I have to see, and not something else. So in my case, what I am applying is a completely different concept. First of all, I want to see all the currencies together in the market. And that is not possible with MetaTrader only. I need to have, as usual, my algorithm that performs the calculation of market performance, because when we are applying support and resistance this way, we're only doing this based on a price action. But what you're not observing is the market performance that, by definition, must be something that has to be relative to something else in order to create an index of performance. And because of this, I use it as a collateral tool, which is fundamental, Excel, of course. And what you can see now here is something that you will never see in a normal chart of a trading platform displaying. We can always understand that fundamentally we need, I just prepare for you to show, okay? Fundamentally we need to understand how the currencies are behaving together in a kind of matrix, okay? And this is one step of the analysis, because this is very crucial, and understand what are the currencies that can be traded. In this case, GBP against Australian dollar was the other couple that I paired with euro dollar, and this I can see the performance of GBP Australian dollar by this way. The euro dollar increased, and the Australian dollar, the GBP Australian dollar increased, creating this quite straight trend, okay, and correlation. But then before this, as they all appear the same somehow, or they have in the distribution that doesn't reveal immediately, and we are examining in this case couples of pairs, I created this tool which provides me support and resistance, not in terms of the price action of one instrument only. In black you can see the euro dollar. Let's say this is a medium term, and this is a long term. So let's say that around here was midnight, okay, something like that. And by having this tool, let's magnify this one first. By having this tool, I can clearly see all the currency pairs: euro dollar, GBP Australian dollar, GBP CAD, okay, and so on, GBP New Zealand dollar, and so on. And I can see here the euro Australian dollar. And you may notice by yourself, without for me speaking that much, how each and every currency pair creates support and resistance to the other currencies. And what was important for me to see, it was that developing from the beginning of the day, let me just add this little explanation. Okay. Okay. Let's say that this is the midnight. Okay. It's midnight. And of course, we're always having the past here, and here we have the present now. Okay, so we have to read the chart this way. So we are coming from this side of time, and through the very first hours, we could have already checked here in the spot that this currency, which is, let's do this, GBP Australian dollar, can you see? Okay, so let's do, okay. So you see that started from here already to show more strength than others, and started to relate in support with the movement of euro dollar and other currencies that were anyway getting strong, but because of them, because they are expressed with on a base of GBP, which was strong and strong and strong. Okay, so GBP against New Zealand dollar, against CAD, and against Australian dollar, we could have all trade all those currencies or having a system, but we already saw here at the beginning of the day a kind of possible scenario with more probabilities for GBP Aussie to go and buy against in positive correlation, with euro dollar. So that was it. In a matter of some minutes of observation here and then some confirmation here, and as you can see, these levels of support and resistance that have been created by they probably are influenced by other minor currencies that anyway are influencing, like Norwegian krone, which is a classic. But then, as you can see, as this level is respected, and somehow if it's violated, then we have a negative correlation with one of these other pairs that we will identify. But this is the forecasting for this day. So now we are going towards the end of the day, and now we will probably assist to a kind of shrinking or recompacting of the prices of the different financial instruments to a new level of equilibrium probably. Okay, but the assets here already revealed an increment of momentum and strength, and the only relation about support and resistance and breakthrough, because you can see a kind of channel here that it's violated, and it's also violated here. So in my case, support and resistance on the charts, I'm not observing them that much. I have my algorithm which generates already some levels of support and resistance, and that's fine, but they are calculated, they're not guessed, they are calculated with formulas. But first of all, I do observe the processing of all the high, low, open, close, and the price action converted properly into market performance, and then providing me this more complete vision of the markets and the scenario that it's going to develop. And replying a more clear situation. So when I observe GBP Australian dollar, I know how is its performance compared to others, and I can understand better how they are correlated each other, and which currency is making support, which currency pair, sorry, is making support to my currencies that I am studying or that I am trading, like euro dollar or like GBP Australian dollar. I decided to trade the strongest one, so GBP Australian dollar and euro dollar. And in regards to this, I want to make you understand that, yeah, we can trace support and resistance levels this way, because what normally you see in YouTube, on YouTube, when you search about support and resistance, so they say here they have sold, at this level they have sold, and at this level they have made a buys. Well, but here they can have sold, of course, GBP and both Australian dollar, but it can also be that they have made a sell of GBP US dollar and made a sell of euro Australian dollar, which means selling euro, selling GBP, and buying Australian dollar, which is the same thing of selling GBP and buying Australian dollar. So here, when price is moving at levels that we think they are support and resistance, we have to understand that not only this financial instrument is affected, not all the trades are performed on GBP Australian dollar. We have also euro and USD, and they interrelate each other, and the measure of liquidity is expressed here. So it could be, yes, that they have sold GBP, but not only against Aussie, but also against dollar. And how can we determine that this relation between GBP and US dollar is represented here in the chart of GBP Australian dollar? We can't. We can't because we don't have the vision of the whole market. But clearly, by having this representation, which is a dynamic representation based on market performance, on multiple currency pairs, and with the proper calculus, provides a clear situation, and we can see clearly that we could have also trade with less profit, of course, because see, it's more a different trend line. Sorry, but we could have also trade euro Australian dollar and GBP this one GBP CAD. So euro Australian dollar, paradoxically, is just a confirmation, because if you can see in my trade, I have euro Australian dollar because of the permutations that I got from this table. And this is a confirmation that anyway, with euro Australian dollar, I made 800 pips and 1800 pips with GBP USD, because I didn't trade GBP Australian dollar, which I could have had, but it makes also, you know, a decision on the kind of approach that you're having. I wanted to hedge my position, differentiating my risk. and because of the assumptions about the strong euro dollar and the strong GBP Australian dollar, I made my trade. So of course I analyzed also other aspects, because this is the whole market also replaced in this other way, market performance. And also I analyzed the progression of the correlation between currency pairs, both with euro dollar and between euro pairs and euro and other currencies, and dollar and other currencies. But then the very final result is this, okay, that we can also see in a narrower time frame, in a shorter time frame. Okay, so this is about midday, around 12 o'clock. But we have already GBP Australian dollar, which is the strongest, and also the other one, which is that Euro Australian dollar. So these two were already up above the others in terms of market performance. We can see clearly that all the rest of the currencies are in a lateral movement, while these ones have somehow had a peak and an increased momentum. And even if they have retraced, and look, this is a clearly element of support resistance, because the weakest currency, which is Australian dollar, New Zealand dollar, is creating the support. Let me just highlight also this other currency. If I can. Yeah. Let's see if I can. Yeah. So this gray one, okay. This gray one that now we see is going up here. Yeah. See that here at this level was the minimum. So even if it was positive, went down in the whole amount of currency pairs of the object of the Forex, and this is the level of support resistance that I call support resistance, because this is the Australian dollar, New Zealand dollar, which was the worst performance of the market, and that created somehow a price line, a trend line that created support also for euro dollar. Okay, so my levels of support and resistance, I consider them here and here. Okay, this is fundamental for me to have in mind. I can't rely on support and resistance levels that are coming from a vision of the markets which considers only one pair. It's not possible to have the whole vision. Okay. So all this said, I think to have given you a kind of inspiration for reading the markets by a completely different approach. But anyway, this approach saves us time, wrong trades. Sometimes I do wrong trades too as well, but I can contain them and or put a tight stop loss, or somehow close them, or hedge them, recovering a loss or a little loss, but somehow raising my balance with only 2 to 4 at maximum 6 positions. But then someone finds its own way to trade, but so they are quite controllable, and they can always be analyzed and somehow produce information in regards to close the trade or to keep it open by analyzing the whole setup, the whole scenario, the whole distribution of the currencies in the whole context of the Forex market. Okay. For any question, as usual, I invite you to write a comment or an email, to subscribe my channel, and if you have specific questions in regards to this, certain things are already quite enough explained in my previous videos, where a lot of other knowledge on the approach on trading is revealed. So I kindly invite you also to have a look back to them prior to send me questions that maybe then you find for sure, because it's a kind of sequence of concepts that I want to distribute. But now I can speak about this because you have the knowledge from my previous videos. So I invite you to watch them back. Okay, and I thank you also for watching them and for watching this video. Thank you all, and as usual, have a good time, have a good space, and enjoy life. Bye.